up next, we have a presentation from Aura Energy with the ticker code AEE. The company has just relisted on the ASX this morning with the share price re-rating. To tell us more about the company's Tiris Uranium project in Mauritania, I will hand you over to the Managing Director and CEO, Peter Reeve. Good morning, Peter.
Good morning, Jane, and thank you very much. And thanks, ladies and gentlemen, to you all for coming on to listen to Aura today. It's a reasonably momentous day because this morning we have relisted, and it's been the first time in a little while that Aura has been seen on the exchange with a high uranium price. So I want to thank all the people over a long period of time who have got the company and the projects to this position. One of my favourite sayings over a long period of time has been success is preparation meets opportunity. So it's a motto that we adopted in the company a couple of years ago, and we made sure that under that motto we could get the DFS completed. And it was a struggle because money was tight and things were difficult, but we pushed as hard as we could. We got the finance from wherever, and we made sure that we were ready at this moment when the uranium price came up so that all shareholders could benefit. So that's been what we've been doing, and everything's come together. The confluence is fairly nice. So, we talked there about advancing the project just on the front slide for a second, Jane. Advancing, the low operating cost Tiris uranium project. And the big thing I want to say is that the low operating cost and the low capex is what's going to drive Tiris to production sooner than a number of our peers, from our opinion. You can see here, after the reconstruction last year, we've got 396 million shares on issue. The share price in London at the moment is trading around, say, a 37-cent equivalent, and I see we're trading this morning at about 30 cents here, or a little bit under. So the market capitalisation in Australia is about $120 million. A point at the bottom of the slide there is that we will offer a non-renounceable loyalty options entitlement rights issue a month after this restatement, which is today. So that's something shareholders should look out for. Okay, so these are the key points about Tiris Uranium. We've got other projects within the company, but Tiris is our focus, and Tiris is the uranium project we think of most of the peers that could get into production very, very quickly. You can see on the left-hand side, low OPEX and low CAPEX, with a capital cost of 74 million and a cash cost, the C1 cash cost of 25. The capital cost has recently been restated, so that is now current for all the changes we've seen recently in the globe, particularly steel prices. So it's an up-to-date capital cost. We're probably the first one to have done that. The estimate, as you can see there, was completed in August 21. We've recently done a 10% resource upgrade. So we've got 17.4 million pounds in measured and indicated, but we've got an overall resource of 56 million pounds. And I think I'm going to talk a little bit later about that's the opportunity for growth within Aura, because we can upgrade that amount of measured and indicated over time. And we are in some discussions already with financing. And I think when we see this uranium price stabilise and we start to get to the point where we see a window through to financing, then we can push the button on this development fairly quickly. Down the bottom, a few important points. We've got a completed DFS. We've got both the environmental permits completed and the development permit granted. So we're ready to go. There's a few minor permits in an operating sense we'll still need to get, but the major two permits are granted. The government was very complimentary of our environmental statement. They said it's probably the best they've ever seen in the country. And given we've got BP and Chevron and some of the big oil producers in the country, it was quite a compliment to us. Because it's a small capital, and because it's a physically small plant, our time frame to development is very, very short. And I think that's our biggest benefit versus all the other groups who you might be looking to ride this uranium boom into the future. So that's an important one to note. And Mauritania it's an unknown country, but it's a great operating environment. And the US embassy was built there 3 years ago, $300 million. The French have got an embassy as big as Central Park. So, and a lot of kids go in there each day for education. So it's a very well-established country. It keeps off the radar, and that's a good thing. It's only a small population, 3.5 million, and we find operating there very, very, very good. Picture tells 1,000 words, and you can see there we don't have many neighbours. We don't have any communities. It doesn't mean we haven't done the right work environmentally to make sure we're set there, but we're permitting in a desert location. There's a lot of other stories here too. You can see an excavator has just dug a trench, so it's a free digging. It's a free digging material. So there's no drill and blast required in the mining of this. If I had a piece of that rock on the left-hand side of that trench and I punched my fist into it, it'd fall into bull dust. So it's a very friable material. You can also see the carnotite uranium mineralization is very shallow. So the whole ore body here occurs between 1 and 5 meters. As a metallurgist many, many years ago, now a rusty one, we always used to hope we could get away with no crushing and no grinding. That's the case with Tiris. So the saving in capex, the saving in operating is extraordinary. And the other interesting thing about it is that everybody would think that the desert, Sahara Desert, has no water. Well, we've just had some excellent water results as we've released. And, we believe we've got enough water for the project life as we stand right now. And you can see on the bottom right-hand side, just that profile of how shallow the mineralization is. One of our big benefits here is that we have this upgradable material. So very simply, we put 120 tonnes per hour roughly into a washing trommel, very low tech, very simple piece of metallurgical machinery. And then we screen the output from that trommel and we end up with very little of the mass, but most of the uranium going into the main and expensive part of the plant. And that's why you can see that only is 25 tonnes an hour as opposed to the 120 tonnes an hour into the trommel. So that makes our footprint, for the size of the plant, very, very small, where all the capital is expended. I want to focus on just a few parts of this modestly busy slide. Shallow, flat-lying surface mineralisation, we're 1 to 5 metres. This is what drives this low capex, low opex. The mining, cheap, it's free digging. Simple extraction, so 92% straight into leach. The carnotite comes out very quickly. I've mentioned most of those numbers in the second section there. You can see the all-in sustaining cash cost is under $30 a pound. And importantly, only 12.4 million pounds of the 56 million we have in the overall global resource is used in our DFS. We did this on purpose because we didn't feel we needed to do a lot of fine drilling to get the rest of the resource into a higher category before we get out there and start the operation. So there is potential to increase that conversion of the measured and indicated into mine inventory. And you can see some metrics there which are quite handy on the project size, the project cash flow. But again, I will say that those numbers, based on $60 a pound uranium, also only speak for about 20% of the resource. The potential upside that I see there is quite major. We're doing this opportunity review that I mentioned, and there could be quite significant cash costs, and we are working on that at the moment. I have Dr. Will Goodall, who's our principal metallurgist, and he's doing that work as we speak. The resource conversion, as I mentioned, that's the 17.4 million pounds in measured and indicated of the 56. We think there's upside there, and we also think there's still some potential for exploration discovery broader in the field. Things that have been going on recently. This photo, believe it or not, is they've been arriving on our desk every morning on WhatsApp in the last few days. So we've had some exceptional discoveries of water. It's like finding gold if you're finding water in the Sahara Desert. So we're very happy with that. And we really do think we're set for water now. So that's one great outcome. The next one is this Tiris opportunity review to lower the cash costs. We've got vanadium as a byproduct in this ore body, and that goes into solution straight away with the leach. So that is one of the elements we're looking at to reduce the costs further from, obviously an already very competitive cash cost of $25 a pound. We've got a net zero emission study coming out from Wood PLC, and some of the other assets we work on. We've got the gold gravity survey complete and some drilling's underway there. So we're not just a one pony trick. We really tried to broaden our offering when the uranium price was a bit lower, and that's something else is an add-on for shareholders. Next slide, please. This has been changing quite quickly lately because of the market capitalisation, but we updated it this morning, and I think it just speaks to what we've seen as the sweet spot for where we wanted to place ourselves. We wanted to be really down the bottom end of that project capital cost, the bottom axis there. So that's where we are, the 74 million. So we are lower than many of the other companies, and then also in the market capitalisation. So we're sitting there about that 120. We took that off the UK market last night, and it's a true replication. So we offer a low capex, which allows the project to be very doable, and we've got a low market capitalisation, which means we've got a lot of upside for value generation for shareholders. Just on the two other projects we have in the company, I won't dwell on it, but I just want to highlight it. We've got a vanadium project. Everybody's got a big vanadium resource, clearly. When we do all the marketing, that's what we talk about. But we've got a high-grade zone, and that's only 20 metres from the surface. It's a very small project. It's very compact. We're very happy with the study we completed about 12 to 18 months ago. We weren't able to release it on the ASX for some funny reasons about the size of our company versus the project capital, but we hope that can change soon. And it's a very compelling project with vanadium and a very good potash credit as well. We plan to spin it out somehow, and the Swedish government's driving a lot of this green metal revolution. So we think we'll get a very good hearing for getting this project underway in that country, and we will have a battery manufacturing initiative as part of this. Back in Mauritania, in central Mauritania, we think we've got some of the world's best underexplored Archean greenstone belt. Archean greenstone belt is exactly what you find in Kalgoorlie. As we say, similar geology to Kalgoorlie without the crowds. Previously, they spent $3 million on it. We were able to buy that for $100,000 in a royalty. And the most significant thing here is the Tasiast 21 million ounce gold discovery is just 40 kilometres to the north of us. So we rate this ground very highly. We rate the project very highly. Again, it's not the key focus. Hagen's not the key focus now. Tiris is, and getting Tiris into production is the key focus. But this is a very, very good asset. And, on top of the gold, we have very good nickel discoveries, nickel finds and discoveries, intercepts, and we also have some very good cobalt hits. So it's an exciting project. And hopefully, both those projects, Hagen and the gold, we can, in a way, push to shareholders as dividends in the future. But they're sitting second to our myopic focus to get Tiris into production. My background is metallurgy, worked with some of the big companies, had been a fund manager in the past, and I ran Ivanhoe, or founded with Robert Freeland, Ivanhoe Australia, and we ran that as a very large company for a period of time. Martin's been involved in startups as the current chairman, and a number of sort of early stage developments. And Peter Ward is a broker in the country, and I'm sure some of you would have come across him in the past. So that makes up the management team. I think we're at an end there, Jane. So I just wanted to say thank you to everybody. My summary really, in essence, is we've worked really hard to get the company to a point where the DFS is complete in time for the uranium price to run. That's worked. We're really well poised. We're really well set. So I hope the shareholders enjoy it, and we have some good development discussions in the coming 6 to 12 months.
Peter, thank you for the presentation. We've had quite a few questions come through, so again, I'll jump into them. So do you have further drilling planned at Tiris?
The most efficient way to drill, I can tell you, every time you go into the Sahara Desert, quite quite realistically, it's an expedition. We take out water tanks, we take out fuel tanks. So it's an expensive option. We think we've got enough to start the project at a very good size, and we will do more drilling when we're on site and when we start the development phase. We don't have any immediate plans to go out and drill in the short-term frame, but we are going to keep on looking at ways to expand that measured and indicated part of the ore body. We're also looking at a few other elements that we touched on in past years, where we had some very high-grade hits in hard rock in uranium just north of the project site. So we may go out and do some work on that in the short term. So we like the broader exploration. The project exploration can probably wait until we're out there and we've got a tent at least, or a donga or something we can live in. It's a bit hot out there.
Perfect. And so just another one. So when do you expect to finalise the financing agreements for Tyros?
Look, too early to say. Needless to say, we are on it. And, I think we've got to see and we've had a great presentation from Brandon on the uranium price. We've got to see a good, stable uranium price and hopefully higher uranium price, and we will focus on that more. We are having conversations and discussions with various people on that. Too early to conclude it and too early to say when that would be, but it's definitely on the agenda strongly at the moment.
Well, Peter, that's all we've got time for today, but congratulations again, and thank you for joining us on Broker Briefing.
Thanks very much.